getting yourself to be, a bit more curious about funding and what's happening in the Indian startup ecosystem, we have someone really great for this entire webinar to, actually deep dive into the funding of our deep tech particularly. So our guest today is Vishvesh Krishna, who leads deep tech and hardware investments at Rainmatter by Zerodha. And while most of the startup world chases software and AI, Vishwesh spends his time backing founders building hard and physical things, electric motors, grid scale, batteries, the kind of stuff that takes years and lot of patience. He's in aeronautical engineering by training, follows the public markets closely, and has a really soft spot for founders who solve hard problems from very first principles and do a lot with very little money. Please welcome Vishwesh with huge great and applause. Vishwesh, you can start the camera if possible. Yeah.
Hey, hey,
Hi,
hi.
Vishwesh. Hope you're doing good.
All good, all good. Thank you for having me.
Yeah, I think we have a lot of participants here, waiting to hear from you and learn more about what's going on in the startup ecosystem from the inside because Rainmatter is one of the biggest propagator of the India story when it comes to startups, particularly deep tech also, and where the entire Indian funding ecosystem per se or the investment ecosystem per se is going for how do I say dopamine investments per se and not patient capital, where India lacks a lot of people who want to back founders who can patiently build. Here you are with Rainmatter, who is building, who is actually wanting founders to build from a very patient capital manner and want to actually build a really substantial rather than something which is very quick, right? So thank you for that. First of all, the Indian startup ecosystem is grateful for that, not just me.
No, no, definitely. I think, when we look at how to invest, we always keep a longer term horizon. One thing that we always internally speak about as a team is, the scaffolding and the infrastructure just isn't there for companies to sort of be developed and sort of exit in 4, 5 years, right? Especially hardware. I think all these companies, it sort of takes 2, 3 years to figure things out in the first place, right? And then you slowly start understanding the market, you slowly start understanding how to sell, who to sell to, and things like that. And those are typically much longer gestation periods, right? All these things take 7 to 10 years.
Right.
Maybe,
Correct.
in other geographies like the US, where the markets are really mature, the existing
Mm.
infrastructure exists for you to be very fast to
Right.
get an exit. Exists, but and so we feel that we should take a somewhat different lens while backing most of these businesses.
Right. That is totally right. So yeah, I'll start with my first question, Vishwesh, without wasting much of your time. So you trained as an aeronautical engineer, right? You follow the stock market closely, as I also said in my introduction, and now you spend your days backing hardware and deep tech founders. That's a very interesting trajectory, first of all. At a time when software and AI are where the easy money is, why the harder, slower stuff? Like simple question.
Yeah, no, I guess I guess that sort of boils down to interest as well. I
Yeah.
was never really enamored much by that side of things. Not
Hmm.
to discredit it, but this really felt much more intuitive.
Right.
In terms of backing, and I think I think it's not that there's no hardware, and I mean there's no AI and software and all these hardware companies that we're looking to back. I think it's just a
Hmm.
different flavor of things, right?
Okay.
If you look at sort of maybe some of the examples that we've sort of seen up close, when if
Hmm.
you're doing something in motors, there is very complex software that sort of goes into building a motor, right? There's a motor controller that you
Hmm.
have to eventually end up coding, and
Right.
I think that's the software I'm sort of drawn to. But
Hmm.
hardware is just inherently more interesting and something I'm more drawn to, for a
Right.
long time.
Okay. So, Vishwesh, correct me if I'm wrong. You are more driven towards a company who can be a part of a concrete supply chain of any sector, be it hardware also, A, and B, what are your I don't think as Rainmatter also or as you also, y'all are more keen on agentic AI as something like standalone. As you said that AI as a part of a supply chain or a concrete hardware company as a part of the process is fine, but
Yeah.
agentic AI as a sector, I don't think y'all are that keen about.
Yeah. So I'll take the first question first.
Hmm.
Um, So we took this call specifically for
Hmm.
EV two-wheelers. Okay, this
Okay.
part of being an earlier
Hmm.
participant in the supply chain, and I'll
Hmm.
qualify that. So
Hmm.
when we were looking at the EV two-wheeler space, Exovather,
Hmm.
we felt
Hmm.
that even if the product is the best product, even if this is the
Hmm.
best two-wheeler that exists, it's very hard to
Hmm.
communicate that product to the customers.
Hmm.
Let's just say you manage to communicate that to the customers, you then have to figure out distribution, you have to figure out where to put these showrooms, how to control the
Hmm.
experience of the showrooms, and
Hmm.
all that is very capital guzzling. And the worst part is it never guarantees an outcome, right?
Makes
It's
sense.
very,
Hmm.
very difficult. Like, I think if you try
Hmm.
and go head to head with some of the TVS's, Hero Hondas, and
Hmm.
the
Hmm.
incumbents, it's so hard to take them on at these, at the dealership game, at the marketing
Hmm.
game, and things like that. That
Hmm.
there is no guarantee of the best product succeeding. Now, take one
Hmm.
step back. Within this two wheeler, if I
Hmm.
can build the best motor, if I can build the best onboard charger, if I can
Hmm.
probably integrate powertrain components and give you better efficiency, then what
Hmm.
happens? Right?
Okay.
In that
Correct.
case, I'm
Hmm.
dealing directly with the OEMs, and the OEMs will purely accept this on a performance basis, right?
Makes
Or
sense.
somebody
Correct.
looking to build a two wheeler will purely accept this on a performance basis. And so that problem is much harder to crack. As in, the
Hmm.
engineering is much more complex. It's much harder to get the
Hmm.
talent to try and build something like that and stuff like that. But
Hmm.
once you get the product right, it'll sell itself, right? On pure
Hmm.
merit, that product will sell itself. That's the
Right.
first half of the question as to why we started
Hmm.
looking earlier in the supply chain for some of these things and sort of take sometimes a subsystems approach to markets.
Hmm.
The agentic AI bid, I must say I guess we don't understand it well enough yet, right? I can't.
Hmm.
uh, with things moving so fast, some of us wake up every day, Claude dropped a new
Hmm.
feature, GPT dropped a new feature. You
Hmm.
can now sort of run multiple agents all at once.
Right.
So some of us on the team actually do, very actively,
Hmm.
do this cloud coding bit, run agents, automate
Correct.
workflows and things like that. But I don't think we've done it enough to sort of understand it in a way that we can invest, right? And it's
Correct.
not
Makes
very
sense.
intuitive. I open my timeline and I see guys sort of having 300 agents talking to each other and running this parallel
Hmm.
workflow, and I keep thinking,
Hmm.
"Oh, what work is this that you could possibly need 300 agents for?" Now, I think that
Right.
question comes from a lack of understanding of how these things work. I was never good
Hmm.
at the software bit. I was never good at coding.
Hmm.
So I guess all of us sort of share that on some level, that we just
Hmm.
don't understand the space well enough. While we
Hmm.
use it, see the value in it, I don't think
Right.
it's enough to understand that, okay, this person is better than XYZ, and that's why we should
Right.
back. Yeah,
Right. Like that was like very insightful, Vishwesh. But one thing I learned from your answer is that in correct me if I'm wrong. So when you spoke about that EV bit in the start of your answer, you were basically explaining us that a product which solves for distribution is something which is more investable. Basically, if you are making a very high quality product, then it is solving for its distribution itself. Coming to the
yeah,
components of the EV you were talking about, right? If those
yeah,
are so high quality that it can be, if let's say outsourced to the conglomerates like TVS or let's say Honda, then you've solved for distribution for your product itself,
yeah,
right?
yeah.
That is correct. So basically, becoming the part of a supply chain along with very super high quality, super high quality that you solve for the distribution itself is something which is more investable than anything else. Yeah,
Yeah, and we see
got
that. See, the thing is, you can't
hmm.
extrapolate that to every market, but in certain markets, you definitely can. The
Right,
EV is probably the best example of that. Yeah,
correct.
yeah,
Right, makes sense. Correct, correct. So again, like, so most people here got some early success and now want to raise money to grow faster, right?
yeah,
So, but in the hardware and deep tech, money goes fast and the road is long, right?
yeah.
When does a founder like that actually need to raise, and when are they raising too early? How do you tell the difference?
So I think that's where we come in a little bit and try and talk to them as well.
Hmm.
Um, I think in hardware, when you see a little bit of early success, it's very
Hmm.
easy to come in, get that excitement, and we also share that excitement. But it's very easy to
Hmm.
come and say, I've sort of de-risked the V1 product of this, like the
Hmm.
V1 version of this. I'd like
Hmm.
to raise 50 crores at, say, a 5 to 10% dilution.
Hmm.
Uh, Now the thing is, probably if you're building something that's very niche, very novel, um,
Hmm.
you you might not be able to find the talent itself to sort of build for that, right? It's very hard. Like we hear founders sort of struggling, saying, I don't even know where to find some of the people I need to sort of build this product out.
Right,
Now, then it comes to you sort of justifying the 50 crores, and then we're thinking, look, it's going to take about 6 to 12 months for you to finalize on what your team is for the next phase itself, right?
right.
Parallelly, you have X amount of product to sort of build and iterate on until then. Why don't you
Right.
take 10% of what you're looking to fundraise? You get to dilute
Hmm.
much less. You get to preserve
Hmm.
more equity for you
More
and the team.
equity for you.
After
Hmm.
12 months, after 18 months, why don't you raise another round coming to your investors and saying, okay, look, I did V1, I can do
Hmm.
V2, it has all these improvements, and I have my
Hmm.
team that's ready to sort of, accelerate the R&D for this and then help it scale as well. Now I'd like
Hmm.
to raise a slightly larger amount
Hmm.
because I've got to sell as well. And I think I've de-risked
Hmm.
the product to a point where, I might not
Hmm.
have to do too many more iterations every couple of weeks.
Right,
Yeah.
right. Yeah. Interestingly, I think deep tech is a very different space than any of the other sector currently, raising investment rounds, because it's what you just explained is basically the definition of patient capital, because the kind of capital required is more for the R&D part and solving for things like where do I get the team, because the product or the sector is so niche that you don't
Yeah.
get that people that easily, that you can just put a LinkedIn job post and you might get people for that. Yeah, that
Precisely.
does
Yeah.
make sense, right? So you praised Delectric for building a lot with very little outside money, right?
Yeah.
And across the founders you've met, what do the ones who stretch a small amount of money far do differently from the ones who burn through a lot?
Okay. So on this one, I think
Hmm.
we'd have to sort of split this into two types of founders, right?
Hmm.
One
Hmm.
who has sort of had a long time, in the market, had a lot of experience as a founder, understands cost structures very well. And one
Hmm.
is sort of people who are much younger, right? Like you see people who are 18, 19,
Hmm.
20, sort of freshly coming out of college or in college. They don't have any of this
Correct.
experience, sorry, working in a company or anything like
Correct.
that.
Hmm.
Now, you
Hmm.
look at the more experienced founders. For one, they might have also had some success over their lifetime that has sort of
Hmm.
given them a cushion in terms of financial support. So they might be able to bootstrap it to a longer
Hmm.
point, right? Now, the
Hmm.
longer you bootstrap a company and
Hmm.
the longer you spend without raising outside money and developing your prototypes and developing the POCs, developing the earlier
Hmm.
products, you
Hmm.
can then raise and preserve much
Hmm.
more equity as you go, right? Now, maybe, for
Hmm.
the earlier founders, this is not a fair statement to say, you should bootstrap this for as long as possible because, in a lot of cases, we're
Hmm.
just in college, we're barely struggling to sort of,
Hmm.
eat out and things like that. And in
Does
that
make
case,
sense. Correct.
they have to sort of raise some
Hmm.
money to de-risk the product, and that's okay. That's perfectly fine. But for Delectric specifically, if I should come
Hmm.
to that, um, the technology that he's working on, which is redox flow batteries, is for energy storage. Now, world
Hmm.
over, historically, X of
Hmm.
China, people have raised
Hmm.
tens of millions of dollars. People have raised even hundreds of millions of dollars to try and
Hmm.
get this technology out. Right
Hmm.
now, they got the technology out, wasn't cost feasible, weren't able to
Hmm.
reproduce it,
Hmm.
very well. And
Hmm.
parallelly, the same level of
Hmm.
technology that these guys had reached,
Hmm.
Vishal from Delectric had reached it
Hmm.
bootstrap, right? Now,
Hmm.
if you
Hmm.
can sort of compare those two numbers, right? Like it's
Hmm.
not like I'm saying, the incumbents took say 8 to 10 crores and sort of de-risked
Hmm.
it, because there are people who have worked for a long time who have sort of saved that money
Hmm.
and
Hmm.
can build a product out with 8 crores. These
Hmm.
guys raised hundreds of crores, right?
Hmm.
And they
Hmm.
weren't able to sort of
Correct.
distribute that out. But at the same time, if you bootstrap something to there,
Hmm.
I think the value creation in the future can just be immense.
Right.
And I think it goes to everybody that we're sort of working on.
Hmm.
The thing is, in deep tech, there's sort of
Hmm.
sometimes, a standard dilution. That standard
Hmm.
dilution is basically, okay, this is a seed stage, this is pre-seed, we have no idea where this is
Hmm.
going. This
Hmm.
is the sort of money you need. Let's standard do a 20-25% dilution, right? You can't really go
Right.
there and say, okay, this is the market, this is the supply chain, this is what I think that
Hmm. Hmm.
you should raise at, and this is what I think your company is worth,
Hmm.
because it's all arbitrary numbers. um,
Makes sense.
maybe some funds have a more scientific
Hmm.
method of sort of
Hmm.
approaching this valuation, but that's what we feel. And
Hmm.
say you bootstrap it to de-risking this product, and you
Hmm.
have a 1:1 parallel as to these companies in
Hmm.
the West, have sort
Hmm.
of raised $10 million to get to the same stage where I'm at, and have hired
Hmm.
100 people or 50 people or 60 engineers,
Hmm.
and I've done
Hmm.
it with a team of 10.
Hmm.
That gives
Hmm.
you immense leverage to go out, and
Hmm.
not just raise money on your terms, but also
Hmm.
expand globally, right?
Correct.
Yeah,
Correct. Makes sense. I think again, coming to the Rainmatter's philosophy of investing in founders who understand first principles. As you said that the electric guys actually solved something for bootstrapped, which people raise millions of dollars for. That showed you intent plus PMF both at the same
yeah,
time, solving on
yeah,
the first principle level. And again, talking in very Gen Z terms, it was a very big green flag, right?
yeah,
So yeah, absolutely agree to that point, Vishwesh. So yeah, coming to my next questions, a lot of Indian investors won't touch anything that takes 7 to 10 years or need factories and heavy spending. Why is
yeah.
it so hard to raise money in India for hardware and deep tech? What would actually change that?
Yeah, so a great question. Now,
Hmm.
the thing is,
Hmm.
LPs, LPs have sort of funded some of these companies, and the earlier
Hmm.
venture funds had to sort of crawl so the rest of us could walk,
Hmm.
right? So,
Hmm.
like, all of us are eternally grateful to all the work, the people have done before us. But I
Hmm.
think 5 to 7 years and calling back on your money is a very difficult thing for the investors to do as well. Sometimes
Hmm.
it just so happens that the business is
Hmm.
just getting into its stride, right?
Hmm.
Now, think
Hmm.
of it this way: you've made a seed investment.
Hmm.
It takes 12 to 18 months for the company to sort of put out the first product, right?
Hmm.
You just understand
Hmm.
it, and then they raise their next round to do sort of a pilot manufacturing facility. They realize
Hmm.
that okay, the demand is real. This is by year 3 or year 4.
Correct.
And on the fifth year,
Correct.
they come to raise and they say, okay, everything is sorted. I've de-risked everything.
Hmm.
I understand who my customers are. My customers are ready to pay at this price point.
Hmm.
I need to raise around to do capex. By the time they
Hmm.
close their fundraise for the
Hmm.
capex, uh, to get into the capex, it's year 5.
Right.
And on year 5,
Hmm.
your LPs are sort of saying, look, I need to get some money. I need some
Hmm.
uh, multiple on invested capital. I need to call for the money
Correct.
back. But then the investors
Hmm.
are in a slightly difficult place saying, uh,
Hmm.
guys, can you please stick around? Because this thing is just going to explode. Like we've just
Hmm.
figured everything out and it's year 5,
Hmm.
right?
Hmm.
And this is where I came to you saying, something that Nitin always tells us is it's not possible.
Hmm.
Like you will have
Hmm.
outcomes, but
Hmm.
those are the exceptions, not the rule. Like people
Hmm.
do need 8 to 10 years for you to build a business, for
Hmm.
you to scale things up, for you to see
Hmm.
that exponential sort of hit in, if you get
Hmm.
things right. And so
Hmm.
I think over time, everybody will sort of like, especially if you're doing deep tech or
Hmm.
hardware, everybody will
Right.
sort of, align with this, that we have to sort of be 7 to 10 years. But I think there are also tailwinds
Makes
now,
sense.
right? Like with the RDI
Right.
scheme, and
Hmm.
stuff like that. I think investors can at least tell their LPs
Hmm.
that, hey, look, let's back
Hmm.
them. These guys are getting one
Hmm.
is to one RDI funds. um,
Hmm.
Once they get these RDI funds, it's like additional
Hmm.
capital that we didn't bargain for, but we get as an
Correct.
additional thing. It'll really help
Correct.
them accelerate this growth. So
Hmm.
let's take part in this.
Hmm.
It's worth the extra time trade-off that we get, right? And I
Right.
think and I think people who sort of want to participate in this, they will be fine with
Hmm.
it. I think
Right.
earlier, if you look at some of the other companies that were coming through, in the SaaS space
Hmm.
and things like that, it was very, very fast. Like
Hmm.
you could iterate at such a rapid pace that your product would look
Correct.
infinitely different from the month before.
Hmm.
And in that case, it
Correct.
was easy to sort of go from zero to exit in 4 to 5 years. That is not the
Hmm.
case here, right? Sometimes for you to get
Hmm.
ARA, take the EV space
Right.
again. If you want to even test your product with an OEM, it takes 18 to
Hmm.
24 months
Hmm.
to test your finalized product. What are you going to tell your investors in the meantime?
Correct.
Right? And because this
Correct.
this is this has to do with the road safety of individual people that are sort of driving and riding every day. You can't take a
Hmm.
shortcut. You can't say, okay, thirty
That is
thirty
true.
days I'm going to test it and it's going to be okay, right? If it takes
Right.
2 years to test a single product and your next version
Hmm.
is going to take another 18 months,
Hmm.
it's a tricky space to be in, to say, yeah, 5 years I need my money back.
I think that makes it very clear also because anyone who's actually intentfully building for deep tech will take time. If let's say if he or she is coming to you and telling that I'll build this in 5 years, then I think you'd be like, no, I don't want to do this then because you have seen deep tech companies. and it takes time. There is no way you can build it in 4 to 5 years, because the kind of commitment and the R&D it takes is as patient per se,
Yeah.
right? So before I go on with the next question, I just want to tell everyone in the audience that we have a first poll coming on, so please do answer the same, right? It would help us form the questions better. Yeah, so thank you for that. And Vishwesh, what we recently did was, for the fourth edition of the Indian Dream magazine, we usually do a magazine which is, HBS kind of a magazine, which is more around startups. We don't put any ads, it's just fully content for anyone who wants to read a 3 hour highly intentful and technical podcast around the startup in 3000 words, something like that, right? So we
Okay.
recently hosted Jitendra Choksi of Twitter for the same, right?
Yeah.
And we had a 1.5 or 2 hours conversation with him for the article itself. One thing he mentioned to us in that interview was that he's like, there was a time in Fitter where Fitter was struggling, right, through some of the angles, and he had just out of blocks of roads from everywhere, he just texted Nitin that, see, this is what I'm building, this is where I am, and these were my numbers. And Nitin instantly is like, okay, let's get on a call. Then things went ahead and ended up, Rainmatter invested a certain amount
Yeah.
in Fitter, right? So now Fitter per se, if you see, is as a sector or as a model of what Fitter is not something which Rainmatter usually invests in. But it has turned out, a completely success for Rainmatter also, and Fitter itself is a really, really great product. So, what
Yeah.
do you have to say? Because one way I see that Rainmatter is not sector agnostic, but when it comes to certain investments, Rainmatter gets a bit, sector agnostic. So,
Yeah.
yeah, I would like to know more about that.
Yeah. So great question. Now, one of the verticals that we look at as a fund is the health vertical, right?
Right.
Um, mm, Now, over there, the thesis was two things when we had started out. We wanted to take a completely preventative
Mm,
aspect of sort of investing, right? Most of the
mm,
people are sort of looking at these healthcare investments.
mm,
The
mm.
PE guys are sort of investing in large hospitals and things like that. But we had
Right.
a different thought, which was, can we sort of avoid getting there in the first place, right? A
Mm,
large amount of our population is very unhealthy. A large population doesn't really go to the
mm,
gym.
mm,
Large population doesn't get enough protein, doesn't get
mm,
enough or good nutrition, right?
mm,
How can we solve that? And the
mm,
earlier, some of the earlier investments we made, right? Like say
mm,
some great companies like True Native, Whole
mm,
Truth, and all these
mm,
guys.
mm,
The idea was, okay, we're not getting enough protein, right?
mm,
If you go deep, if you just do a general survey of people, they probably
mm.
say, yeah, I eat loads of protein, I have dal every day, right? And that's
Correct.
probably
Mm,
not enough for
mm,
whatever you need, whatever your body
mm,
needs. So we said, okay, fine,
mm,
can we back some of these companies in various form
mm,
factors that would help them get
mm.
healthy? Now, coming
Right.
to figure, uh,
Mm,
if whoever goes to the gym,
mm,
you get that feeling that it gets
mm.
quite boring, it gets quite monotonous. You go
Correct.
every day, you do the
Correct.
same lifts, you do the same
Mm,
routine. After a while, you
mm.
want a little something different. And so
Right.
it's always nice to have these sort of trainers who are walking you through what you're
Mm,
doing, talking you through your
mm,
progress. This is
mm,
what you're supposed to eat, and not necessarily sacrifice. Like if I like to
mm,
eat a certain amount of sweet,
mm,
or if this is my
mm,
lifestyle, they help you
mm.
work around your lifestyle, and we just don't have that knowledge, nor do we have that bandwidth, right? Like as
Makes
working
sense. Yeah.
professionals, like say you're working 12 to 15 hours a day, you don't have
Mm,
time to sort of go
mm,
look at, okay,
mm,
what vitamins do I need, what is my blood
mm,
report sort of telling me, what
mm,
exercises should I do today,
mm.
and these kind of things we felt that Fitter solved so well, right? There are so many
Correct.
success stories. There are people on our
Mm,
team who are still on Fitter, people who have
mm.
become really fit, but they still
Right.
feel that it's nice to have that push from these trainers, right? And there were so
Right.
many verticals that Fitter were sort of looking to get into, which was the
Makes
owning,
sense.
a large part of the health stack. um, and we
Correct.
felt that, if we can even make a small dent in, helping people getting fit and
Mm,
preventing
mm,
all the problems that come after,
mm.
that'd be a great bet worth taking, and I think it's worked out really well.
Yeah, I agree. And the way I think Jitendra also understands the space is quite amazing.
Yeah, yeah,
And he's so pro preventive healthcare from his Instagram, content. he's so clear around everything. He's filing for RTIs left, right, center to get clarity around
Yeah,
what he is building. He's very intentful around those things, and
yeah,
that looks very great. Sometimes I just realize that when I see Rainmatter, I can replace FSSI mark for Rainmatter. If Rainmatter has invested into something, that will
yeah,
be good. Like as a consumer, also I can trust it. That if before in like investing myself as a consumer into a product, I should just check the investor list and see if Rainmatter or any of the allies are there. I can just buy the product once and for all. So, that is one of the great things about the way Rainmatter actually invests in. So, like again, coming to some outside deep tech questions, how do you think about the D2C space right now? Like overall, because Rainmatter, I don't see, if I'm wrong, because directly Rainmatter has never invested to any D2C companies as such. They might have some other product too, right?
yeah. No, so
Yeah.
it's not like we don't do D2C.
Hmm.
Again, it's see, we've done Whole Truth, we've done True
Hmm.
Native, Super You also is
Hmm.
in that realm of things. But
Hmm.
it's not that we don't do D2C. It's just that again we realize that there are very
Hmm.
immediate ceilings to this, right? Now,
Hmm.
one of our colleagues had just done a podcast on TAM and things like that. Now, if you come
Hmm.
and tell me, okay,
Hmm.
the chocolate bars market is so and so billion. I'm
Hmm.
making this protein bar. I want to
Hmm.
I'm going to build this out. I want XYZ
Hmm.
valuation. It's very difficult to
Right.
do that because there are so many market forces against you. For example,
Hmm.
now if I'm addicted to, say, the Whole Truth bar or the Super U bar, the third guy
Hmm.
sort of coming in,
Hmm.
what is my incentive to switch that? Okay, I'll try it out, but I
Hmm.
really like the products that I'm sort of using right now. The
Right.
other company might sort of have to burn so much more to beat the incumbents, right? You might
Hmm.
have to have a very, very differentiated product, and we feel that beyond a
Hmm.
certain point, right, it's hard to differentiate. The idea for us getting
Correct.
into Whole Truth and everything was that it's very clean label. Like we've
Right.
personally did all these products, right?
Hmm.
We've personally checked them out. We've all tried them out. We felt that,
Hmm.
okay, this is something that we need. Now, how many
Hmm.
of those, how much room is there for all of those companies, right? People
Makes
come to
sense.
us, a lot of the time with,
Hmm.
say healthy snacking, for example.
Right.
There are certain versions of those in the industry.
Hmm.
Now, yours might be slightly healthier.
Hmm.
There might be, say, some small trade off in taste.
Hmm.
I've done it myself where, okay, I'm on some of these healthy snacks for a bit, 1 2 week Josh I get, let's
Hmm.
just sort of eat clean and
Hmm.
things like that.
Hmm.
Next thing I know, I'm back to eating a Lay's or a Kurkure, for example, right?
Correct. Right.
And if
Right.
I myself as a customer, I'm not even doing
Hmm.
an investor analysis right now. If I myself as a customer
Hmm.
sort of feel this sometimes,
Hmm.
it's much harder to get into some of these markets, much harder to underwrite the risk. But there are
Hmm.
consumer funds, right? Like if you look at DSG
Hmm.
partners and all, I think they get it
Hmm.
right so often
Hmm.
because they have such an
Hmm.
innate understanding of the market, which I think once again, we don't fully have. But that being
Makes
said, I
sense.
think credit to the team. We've
Hmm.
made some amazing D2C bets,
Hmm.
but
Hmm.
it didn't come from a D2C lens. Like we didn't.
Exactly my point. Correct.
Yeah.
Yeah. Yeah. Fair enough. Fair enough. So, okay, before I hop on to my next question, I would like to ask the audience that we have one more poll coming on. So please answer the same, right? And yeah, coming back to you, Vishwesh. So one thing which I want to ask you is very simple question. Like, because I have talked to so many investors per se, so, like there are 70-80% investor in my knowledge who are founder first investors, and then there are some investors who are business or market first investors. Who
Yeah.
are you particularly? Are you a founder first investor or are you a business first investor?
Ah. I'd say that one can't survive without the
Hmm.
other. But that being
Hmm.
said, if I have a bias, it would be towards the founder. Um,
Oh,
right?
wow. Right.
So even if the
Hmm.
founder is so great, but there's no market to sort of
Hmm.
sell into, doesn't
Hmm.
really matter.
Hmm.
On the other hand, if the
Right.
market is great, but the founder isn't that good, once again, you're not going to get a product out. But you
Got
can
it.
have a
Hmm.
sort of preference, and I'd say, yeah, like
Hmm.
because the founder is ultimately the person that's going to get you
Hmm.
over the edge, right?
Hmm.
Now,
Hmm.
if you look at a crowded space or a
Hmm.
space that has incumbents, and you need somebody to sort of bring a paradigm shift into that product, you're going to
Right.
need somebody who's like really good, somebody who understands the nitty
Yeah.
gritties of that industry to sort of,
Hmm.
you know, overcome that barrier for you as an investor.
Hmm. Right.
And so I think, yeah, I'd probably move, say, towards, backing founders who I'm really excited about.
Makes sense. Got it. Got it. So, yeah. My next question is a lot around India. So basically, a lot of what you back solves big unglamorous problems, right? That is what I think Rainmatter in general is known for: storing energy, better motors, depending less on imports from China, right? So when a
Yeah.
founder is deciding what to build, how much should they think about solving a real national problem versus just chasing whatever's hot right now?
Okay, so over here, right, while we
Mm,
talk about it a lot that, there's a
mm,
China import substitution
mm,
game, we need tech
mm,
sovereignty and things like that.
mm,
It
mm,
the markets aren't going to give you charity, right? Now,
mm,
if I'm building a motor
mm,
that's substituting all the motors that are coming in from China, I can't just say,
mm,
hey, mine's made in India, this is made in China, you buy mine. I have to
mm.
make it in India. I have to have it be on performance or even better than yours because China's
Right.
costs are so cheap, right? They can undercut you on any object, right?
Makes sense.
In that case, it can't just
Mm,
be enough that yeah, I'm building from India. Here, you buy my motor. There has to be a better there has to be a better
mm,
performance. There has to be a better
mm,
efficiency. There has to be a better
mm,
uh, after sales service. All these things
mm.
you have to give along with it, and then that comes in. Right now,
Right.
if people are sort of looking to build something saying, okay, this is something that India doesn't make, this is something that we 100% import.
Mm,
Okay, so
mm,
even if my product is much worse, it'll sell.
mm,
Not at all the
mm.
case. Not at all the
Got it.
case.
Mm,
We look at some of these critical technologies that the defense industries use,
right.
and some people come slightly subpar,
Mm,
products. Very, very
mm,
hard for you to say no. I'm going to take the subpar product because this is like you 99.99% precision you need.
mm.
We've heard
Makes
of some of
sense.
these instances where at the most critical juncture these things failed.
Right.
The army doesn't want that. If you're saying my
Mm,
product is 50% cheaper, I'd rather pay 50%
mm.
more to get the job done because these are
Makes sense.
some things are a
Yeah.
matter of life and death. Now, similarly, if
Mm,
I'm say, the example that you brought was motors. If I'm putting it in my
mm,
scooter, if I'm putting it in my
mm,
two-wheeler,
mm.
I don't want to risk my life as a rider just because my motor is made in India. It has to have a better
Right.
performance, right? So
Right.
I think
Correct.
that's the lens that people should look at more than the import substitution. Of course, the
Mm,
import substitution is a great tailwind, right? We feel that
makes
a lot of
sense.
these technologies we should back because nobody's making it in our
Mm,
country. We're importing all of this. We're using our
mm,
precious dollars as a nation to sort of
mm, mm,
bringing in imports. We can be
mm,
a next net exporter, right? We have that engineering talent
mm,
in our country, but the performance has to be there. That's
mm.
something I'd sort of iterate
Fair.
on. Yeah.
Makes sense. So, Vishwesh, my next question revolves around China, as we discussed recently about China. So, if I talk about the world economy, when it comes to China, the moat of the country is that it's a manufacturing behemoth, right? It's the world manufacturer. Okay. When it comes to US, it's that the moat of US, being a $30 trillion economy, is that it's a technologically driven country. When India will
Yeah.
take, let's say, 10 years to build a technology, US can build it
Yeah.
way faster. Let's talk about OpenAI, Claude, obviously India is also trying to build into it, but India will take comparatively more time. So you can't say that India's moat is technology per se. What do you think, if as India is currently one of the fastest developing economy, and we are running towards becoming a developed nation, what will be the moat of India? You coming from Rainmatter, having the data of so many companies you invest in, you don't invest in, but you look after so many startups, you meet so many founders, right? So, what do you think in the next 10, 15, 20 years, what the moat of India will be if it becomes a developed economy?
So I think,
Hmm.
for better or for worse,
Yeah.
the OpenAI and the Anthropic sort of
Hmm.
shake-up that's happening all across the world. People are realizing, hey, I don't need 5 developers, I don't need 10 developers, right? I don't need a
Hmm.
website designer, and that sort of had a massive shock on our IT services industry, right? We've sort of
Correct.
realized
Hmm.
early on that we just can't depend on one single thing to sort of propel us
Hmm.
as a nation, or we can't just depend on that for jobs, right? I think they've done a
Right.
phenomenal job in terms of
Hmm.
employment for the country, but we now
Hmm.
need to look at
Hmm.
the next leg, right? And
Hmm.
I think 10 years from now, if we are to be a developed nation having some technological modes, something
Hmm.
like electric, right,
Hmm.
where we've
Hmm.
built our
Hmm.
technology, built it
Hmm.
better than what people are
Right.
providing,
Hmm.
world over, built it at a cost that's much cheaper, then people will
Right.
come here. People will inquire with us, and that's just one
Right.
technology. We need to play
Right.
across the entire spectrum, right? Could
Hmm.
be EVs, it could be electronics, it could be I
Hmm.
mean, I mean, could be anything, right? Could be aerospace
mm,
materials, could be manufacturing, could
right,
be anything. We have to fight on all
mm,
these fronts, right? Now,
right,
how do we fight on all these fronts? Risk capital
mm,
has to go in and wait for a 7 to 10
right,
period, right?
correct,
Now
correct,
we've already been seeing a lot of these public market companies, auto ancillary companies who are going into aerospace grade manufacturing, right?
mm,
Because
mm, mm,
a lot of the supply chain is sort of being decentralized. The
right,
opportunity is there. The equipment is already there in a lot of these factories. And
mm,
I think one thing I should also applaud, I won't take any names of public listed companies, but they are also themselves making investments in startups, right? They're
right,
saying, okay, fine,
yeah,
I'll make an investment. I'll lend you some
right,
of my resources, right? Like once you make
right,
your POC, I'll manufacture it.
mm,
You will do it on an invoice basis. I'm not
correct,
going to do charity, but I'll
correct,
help you out. You need some design software, I'll help you out. You need some consulting, I'll
right,
help you out, right? And I
right,
think that's going to make a massive leg up. Some of these
right,
startups that are say building gas turbines or something like
mm,
that,
mm,
I never like. I mean, 5 6 years ago, if you ask some of the other
mm,
investors who were here,
mm,
before us, they'd say, "Look,
mm,
this is going to be a very uphill battle." But
right,
now with all the support coming in from all sides of the ecosystem, people sort
right,
of coming in to help advise some of these startups,
mm,
people cutting
right,
larger checks of risk capital at the seed stage and pre-series A stage.
mm,
I think
mm.
all this is going to be a huge tailwind going forward.
Right, makes sense, makes sense. I think, just wrapping up on what you said and my questions to open it for the audience. One of the founders I was talking to was he's the founder of Agnikul Cosmos, if you know that, right? It's a Chennai-based deep tech startup making small payload rockets, 3D printed, first in the world, right? He had to say that one of the modes which we have as a company is that we are cost efficient, because what we do is something which so many other companies in Europe and US are doing. There are more than 2,000 companies making small payload rockets. But at what
Yeah.
cost we can make as India as a nation would not be able, they would not be able to capture it at all due to the kind of economics they have already going on in there. So just, I wanted to know from you, do you think cost efficiency can be one of the modes of India when it comes to different other products?
100% without a doubt, right?
Hmm.
A lot of
Hmm.
these things, if you look at,
Yeah.
we are so gross margin accretive versus a lot of nations producing the same thing because of our cost efficiency,
Correct.
right?
Right.
If I can undercut another country,
Hmm.
say a German company or
Hmm.
somebody working the same thing
Hmm.
in one of these
Hmm.
nations,
Hmm.
undercut them by 50% and still have a
Hmm.
50% gross margin, that is,
Hmm.
I mean, what a place to be in as a business, right? Once again,
Makes
assuming
sense.
that the performance is equal or better, right?
Right. Correct.
Now, why
Hmm.
wouldn't the other customer take that, right? It's all
Hmm.
so much of it is cost
Hmm.
efficiency. Now, I
Yeah.
think cost efficiency
Hmm.
as a moat is important to build
Hmm.
on, right? You can't
Right.
just use cost efficiency. I think Swaraja magazine had this beautiful post on,
Hmm.
how Maruti Suzuki sort of,
Hmm.
gave R&D, but we didn't really do much with
Hmm.
it, right? We
Right.
didn't
Correct.
really build on top of it. Why did they come up?
Hmm.
There was some cost efficiencies to be gained. There
Hmm.
was all this arbitrage
Hmm.
that was there,
Hmm.
but we should
Hmm.
essentially use that to iterate, right?
Hmm.
You're making a
Hmm.
margin. That
Correct.
margin
Yeah.
then has to go back into finding newer
Hmm.
avenues of
Hmm.
say niche businesses, niche products,
Right. Right.
finding more novel manufacturing avenues, right? In some
Hmm.
of these cases, and I think
Correct.
that's when cost efficiency
Hmm.
alone isn't enough. That when used well,
Hmm.
uh,
Hmm.
will sort of boost things.
Makes sense. Got it. Got it. Perfect. Thank you so much, Vishwesh. So that was, it from from my end. But let's see what the audience has to say. They have been asking a lot of questions lately. I'll just, pick some of them. Right. So Akshay has to say something. So I wanted to know the Rainmatter investment preference in the industry, which invests in the GP of different kinds of AIFs, right, to support first-time founders who are here to offer something new perspective to the global market.
Sorry, could you come again? I just missed the early part.
Sure. So I wanted to know the Rainmatter investment preference in the industry, which
Yeah.
invests in the GP of different kinds of AIFS to support first-time founders who are here to offer something new perspective to the global market. It's basically the question. I'll sum it up for you. The question is regarding like how what is the approach of Rainmatter to invest in first-time founders?
Okay, got
Yeah.
it.
Yeah.
So when it comes to first-time founders, right?
Hmm. Hmm.
There has to be a very very deep passion to
Yeah.
sort of build this out there. Like, I mean,
Hmm.
a lot of these guys that we meet, 2
mm,
a.m., 3 a.m., they're sort of sending you messages saying, hey, I found
mm,
this
mm,
improvement. Hey, this guy in this country is
mm,
sort of doing this. So passion is
mm,
definitely one part of that.
mm,
Um, you
mm,
know, the other thing
mm,
is you have to have an insight that other people don't have. Uh,
mm,
Usually, because see,
mm,
again, over here, people aren't going to look at age
mm.
sometimes. You can be a first time
Right.
founder at 40, you can be a first time
Mm,
founder at 18 also. That's not this thing, but you have to have a differentiated opinion, something that you feel that, okay, I think that
right.
this is the space that I can attack. I
Mm,
think this is where
mm,
the inefficiency is. And I think this is where, if there's a paradigm
right.
change in how the product
Right.
is made, I
Mm.
can sort of bring real value to the market. Yeah.
Got it. Got it. Got it. So Pratik Gupta is asking that, like, what are your views on travel tech with focus on B2G?
I B2G as in to the government.
Yeah. Yeah. I think it's B2G as into the
Yeah,
government.
yeah. So
Yeah.
see, travel tech is something that at least
Mm,
I personally am super bearish
mm,
about. I
mm,
the mo- so Without naming the company again, because one of my
yeah.
couple of my friends work in a travel tech company.
Mm, mm,
They had a massive company be
mm,
their customer for years. Okay, they were sort of
yeah.
automating all these workflows. You put in your
Mm,
requirements, I'll give you everything.
mm,
You don't have to manually
mm,
go to Yatra, make my trip or something, and sort of input your details and book. I'll handle that
right.
entire sort of suite of things. This
Right.
company, to sort of get that customer stickiness in,
Mm,
they gave it free of cost for 2 to 3 years.
okay.
In the anticipation of that, after 3 years, the customer will feel that the product is really sticky.
Mm,
Let
right.
me let me sort of start paying. I don't mind
Right.
paying any amount because I have a huge team. This team is
Mm,
traveling multiple times every day to different places in India and stuff like that. Okay.
yeah.
After 2 or 3 years, they started their
Mm,
first month of billing, or they
mm,
proposed it, and the
mm,
company dropped out.
mm.
Right?
Correct.
You
Right.
give a service for 2 to 3 years, and then on the
Yeah.
third year, finally, when you say, "Hey, I've given all this for you. Can we start
Mm,
talking about payment terms?" And if you drop out,
mm, mm.
that's not a market that I want to be investing in.
That is very true. And also, one more thing is my personal view is that the space is kind of commoditized to a certain level.
I'd say so. I'd say so because
Yeah.
actually, just yesterday, I was looking at,
Yeah.
we're planning some travel and was looking at Gemini,
Mm,
using Gemini
mm,
for travel. It's
mm.
unbelievable. It is the
Yeah.
UI of Gemini
Yeah.
now for travel is so good, down to my flights, where I have to eat, where I can buy clothes. I mean, it's,
Mm.
on a trip
Amazing.
from a
Mm,
0 to 14 day trip, every day is planned
mm,
out in a way that you want,
mm.
with exact
Right.
location, exact flights, exact hotels, in the budget that you
Right.
want. I think it's going to be very hard to compete with that going forward.
Right. Right.
Yeah.
Perfect. So, Vishwesh, without wasting much of your time, I'll just take last two questions. One is that what are your thoughts on fintechs for also for wealth techs because well-being consists of health as well as wealth, financial health, checkup, debt strategies, everything.
Yeah.
Yeah.
No, so fintech, of course, is how Rainmatter started. Now
Yeah.
I don't too much on the fintech side,
Mm,
but
mm.
of course, I think the ecosystem has evolved a lot in the last 10 years, but
Right.
also very hard to beat some of the incumbents in some of the more niche spaces, right? Uh,
Right.
that being said, on the wealth tech side, I don't know what it's going to take for, the HNIs to sort of come and start doing wealth,
Mm.
because the thing is, right,
Yeah.
95 to 97% of people, you're probably better off, um, you know, doing low cost index funds or mutual funds and things like that, right? And that's a step up from
Right.
what most people are doing today, right? People
Right.
still have to discover fixed deposits, people still have to financialize savings. All these things, all
Right.
these steps are still there to be made. Now,
Mm.
how can you sort of add much more value as a wealth tech is something that remains to be seen, right? I think even
Correct.
for some of the more UHNI clients, something we always say is, look, don't try and get
Mm.
into some fancy products. There are some
Mm.
amazing fund managers in our country, right, who've
Yeah.
had a track record for say 25, 30 years, who, if you get a chance, you should invest, right, just to have some sort of
Correct.
diversity and get access to some of that alpha that they can potentially provide. But for most people, I think the best option is to do mutual funds and low cost index funds, right? And
Right.
in that case, how many different types of PMSs are you going to have? How many different types
Mm.
of portfolios are you going to have? A lot of
Right.
the business cycle funds, if you look at today in our country, A lot of them
Right.
still own the index names itself. What are you paying
Right.
extra for, essentially? Right? What
Right.
differentiated view
Perfect.
does it have? Because our markets still aren't that deep. The most
Right.
owned mutual fund stock is still HDFC Bank. That should probably give a flavor of, and not to say that it's not the same elsewhere, but in some of
Right.
these markets, like say the US and things like that,
Hmm.
uh, there's a lot more room to identify some of these companies that are still on the
Hmm.
come up. There are a lot of
Right.
different types of ETFs that you can sort of put into to get a completely differentiated return from, say, the Nasdaq or whatever it is. And
Makes
I don't
sense.
think we've reached that place yet because we can't absorb that much
Hmm.
capital. Some of these
Yeah.
companies are still 1,000 crores, 2,000 crores
Hmm.
market cap, 5,000 crores market cap, really good.
Hmm.
But some of these
Hmm.
mutual funds can't get in because the second you start buying 5 to 10 crores worth of shares, it
Yeah.
drives up the price so hard that they can't exit. Now, in that case,
Hmm.
what are
Hmm.
you going, how are you going to sort of raise a 100, 200 crore fund? Like, how many of these companies can you invest in? I think all those
Right.
dynamics are still something that we have to sort of sort out, right? Some of the fund
Fair.
managers I speak to, they say, look, if the company is below 4,000, 5,000 crores, I can't really make a meaningful position. Now, when that's the case, it really
Interesting.
begs the question, why
Yeah.
should I take that money and go into something that's very complicated, higher lockup and things like that, when something has provenly given you, say, 10 to 12%, beaten inflation,
Right.
beaten the fixed rate over 10, 15 year periods and things like that. I think
Right.
that's a much better choice. Yeah, but this is just my personal
Makes
view.
sense. Yeah.
Maybe some people on the team as well have differentiated views, but that's what makes a market.
Yeah. Fair enough. Fair enough. So, like one last question. It's a bit vague, but there's a general consensus towards that question. Is that how does a founder actually get on Rainmatter's radar?
So,
If I'm not
first,
wrong, I'll just take a guess for it. I'll just take a guess for it. Is that quality has to be solved for and intent has to be there on first principle level.
100%. I think
Yeah.
that's a prerequisite for any of the
Yeah.
investments that we make, right? I think sometimes we slightly
Yeah.
index more on that because if
Hmm.
if you look at some of the problems that we've spent a lot of money solving, which is say waste management, for example, this is a
Right.
very, very unglamorous business, right?
Hmm.
I don't
Hmm.
think uh, it's a very hard problem to get into when you look at SaaS companies raising at 50 times
Yeah.
ARR, and these founders getting these amazing exits. It's very
Hmm.
hard to sort of be a founder,
Hmm.
come and say that I'm
Hmm.
building in waste management. It's a very slow
Right.
process, right? So
Hmm.
your quality and your intent has to be there, because tomorrow what happens, right? Like if you realize that the struggle just isn't worth it, what
Hmm.
a you know
Hmm.
what do your sort of investors do? Because we are also passionate about the problem. We are also putting
Makes sense.
money into something that
Hmm.
I mean, might have a high opportunity cost towards, right?
Right.
And so I think the quality and the passion has got to be there. Um,
Fair.
you know, the other thing is we love people with like a longer term horizon view, right? Like
Hmm.
not playing the short term game.
Right.
That thinking has got to be aligned.
Hmm.
Because along the way it does happen that you have to pivot, and that's perfectly fine. That's okay.
Right.
We have multiple portfolio companies who have pivoted
Hmm. Yeah.
many times over their journey, but
Yeah.
you have to be ready. You have to have an open mind, and you have to be in it for the long
Right.
run, right? You can't
Hmm.
be so rigid in your thinking that, hey, I came to solve XYZ. That's not happening
Hmm.
anymore, and I'm done, right? And I think that's also an important part of things. If any
Yeah.
founders on this call sort of want to reach out, please mail us at investments@rainmatter.com. We'd love to
Yeah.
sort of have a chat, love to sort of listen
Yeah.
more to what you're doing and see in what way we can help. But I think these three things definitely have to be there.
For sure, for sure. So, just first talking to the audience. So, guys, we have the last poll coming on. Please do react to the poll and answer your opinions there. Vishwesh, one thing I'd like to say you is, first of all, thank you so much for doing this. Thank you so much for helping write the India story. As because I think the way Rainmatter or you or Nitin or Nikhil or everyone from Rainmatter, including Dilip, are optimistic on the India story and the way you all are helping. Like what you said, right? That write to us on investment at Rainmatter, right? One thing I'd say to all the people who are in the webinar is these people are the most reachable people. If you are the one solving with intent, as Vishwesh said, you are solving for substance as well as quality. There is nothing else, nowhere you want to go at. One of the best people out there. Thank you so much, Vishwesh, once again for doing this. We really, I personally, if not talking about the audience, learned so much, and I'm taking so much with me today that I can't thank you enough for that. And we'd love to host you sometime, in some of our offline events also ahead. And if you have time, anytime, right? So thank you so much.
Thank you. I mean, thanks so much for having me. This was really nice. I think this is my first time doing it, and it
Yeah.
was a really nice experience. So thank you.
Thank you so much, Vishwesh. Thank you so much. Bye bye.
Bye bye.
Bye. Yeah. So, guys, or everyone, thank you so much for attending. So we just introducing the Indian Dream to the people who don't know about us. That we are one of the most intentful platforms for people wanting to build from scratch. We would host more people like Vishwesh in the room. Apart from that, we also have a magazine called the Indian Dream magazine. Please check it out on the indiandream.club. We would also pin it in the comments below, and where you will find four of our editions, where what we don't write about things which are flexible. We write about things with substance. We write with founders with substance. And please do go and check our magazines out. Talking about what Bishal is asking, can I get the recording of this webinar? Yes, for sure. But anyone who the webinar would only be accessible as a recording to the Indian Dream subscribers, as this was a part of that. We just wanted everyone to attend this webinar, as this was the first time we had it. From the next time, we would just have it exclusively for the Indian Dream members. We are also wanting to have offline events with the Indian Dream members very soon. And these all would be very close, exclusive rooms with very substantial founders and investors, where we want everyone to learn and leverage our networks also, right? So we at Indian Startup News at Large are really grateful that you all joined. Thank you so much for joining once again. See you next Sunday, or probably next to next Sunday. We'll let you know, update you around the next things too. Can you please drop your LinkedIn or SPOC from the team? You can check me out on Ayush Space Shah and write the Indian Dream Club, and you can check my LinkedIn out there. Okay, thank you so much, guys. Any more questions here for the next 2 minutes? Okay, okay. I'll just wait for one more second if there's any more questions. If not, then we can wrap it up. I think 40 members are still there for something. Okay, I think there are no questions. Thank you so much, everyone, for joining. This is it from our end. We'll see you in some of our other sessions. Thank you so much.